Now, traditionally, this time of year usually signals the tabling of the country's funds for the whole of next year. Budget 2010 is expected to be unveiled on October 23rd and will be Datuk Sri Najib Razak's maiden budget as both Prime Minister and Finance Minister. It is expected to be a tough budget to announce, with measures that are meant to both bring the battered economy back to shape while at the same time improving the standards of the people. So just what can we expect for Budget 2010? Well, for that, I'm happy to welcome my favourite economist to the studio tonight, Datuk Dr Zainal Aznam. Welcome, Datuk. Thank you for joining us on a Sunday night. Okay, let's kick things off with the allocation for the 2010 budget. It seems we may see the government putting aside another 200 or so plus billion for next year. But the question is, how is the government going to afford this, considering how the economy has fared?
Well, this is the key question, I think, underlying this year's budget. And I think for many, many more budgets to come, because the financial issue, the financial resources of the government is now being put really in a very strong focus, in the limelight. Even with 200 potential budget for 2010, I think that's going to be quite demanding, because the fiscal deficit is very sizable. It's about 7.6%, but not as high as the American, which is about 9%, but still historically, Malaysia, that's quite a high number. So I think at the back of the Najib's, the Prime Minister's mind, of Minister of Finance mind, is how can he contain this fiscal deficit? A lot of people are talking about the exit strategy after you have stimulus packages all over the world. So definitely I think you'll see that the fiscal deficit is going to come down, I think, with this budget. That means that the total budget cannot be too big. So it's going to be rather a flattish in relation to last year's, this year's budget, actually about 200 plus billion.
So you're expecting the government to attempt rebalancing the budget starting in 2010?
Well, from what we hear, they are going to start, I think, with this budget, 2010, and subsequently. But I have a slightly different approach to that. I feel that 2010, for the year 2010, a little bit up to 2011, the economy should still be sort of supported, not to a huge another third fiscal stimulus, but at least a budget which sort of provides a stronger cushion. So as the economy is picking up slowly in the second half and into the early part of next year, that we shouldn't sort of withdraw too quickly, too much. The fiscal push to the economy. It's not going to be a huge stimulus, really. With 200 plus billion, is just about, of that maybe about a quarter or 30% could be the development expenditure side, and the others are the operating expenditure. And I think it's going to hit much more on the operating expenditure in trying to contain budget 2010. Operating expenditure, we hear they're going to cut a little bit more than I think what they have done in the previous years.
Yeah, in fact, we've been reading some reports that the government plans to reduce operating costs by about 15%.
Yes.
How are they going to achieve something like that?
Well, the big items are, as we know, as no state secret, is subsidies are becoming, over the last couple of years, a very big amount and share and a drag on the fiscal resources of the country. Yes, particularly of that fiscal subsidy, the oil, the petroleum-based products, the oil, the diesel and all that, is very, very substantial. And then there are other safety net features kind of subsidies, which I support wholeheartedly. I'm arguing for more reshifting of the whole subsidy scheme towards the more low-income and already deprived people, rather than people who can afford to buy petrol prices at market prices, I think. So I think the subsidy element is going to come under attack in this year's budget, and we shouldn't be surprised, I think.
Okay, we'll just continue this discussion after our commercial break. We're going to go for a quick break. Please do send in your emails for Datuk Dr Zainal Aznam to stockwatch@tv3.com.my. We'll be back right after this.
Top Glove Corporation is rated a hold with a target price of RM8.30. While there is still upside to the share price on earnings growth outlook, Top Glove has reached RM8.30 target price objective. While the love for gloves continue for growth and defensive qualities, it is a well-told theme and the stock has run its course well this year.